Well, welcome folks back to weekly update for the 7th of May, and what an extraordinary week of action we had, particularly on Thursday night, where we had a massive fall in commodity prices and stock markets went with it. We did see some consolidation though on Friday night, and the US market moved higher, but really some absolutely extraordinary moves. So let's just recap. We saw the largest commodity falls in a single day since the GFC in 2008. Oil fell 9%, gold was down $50, silver was down I think 11% on the night, but 35% in the week after an extraordinary run higher. Copper is back below $4 a pound, or back to its 38.2% retracement level. And there were plenty of signs of panic in the market. Fundamentally, the action is not really justified based on the US data being quite okay, and the US economy is still growing. But the fact was we were really overdue for a correction, and we certainly got one. So the really big question though is how will it unfold from here? So let's have a look at some of the charts, but before we do that, just to cover the disclaimer with respect to the fact this is general advice only and the licensing details. So just to summarise, we did see a recovery on Friday night after that big sell-off on Thursday. The S&P has completed a 50% retracement of the recent move from March 16 to April 7, which was quite a strong move and led to a breakout. I still think 1400 plus is highly likely, but 1324 is equally possible first, so we could still have a little bit more downside. The US dollar had a very strong reversal, and that's not at all good for the stock market, so we'll take a look at that. Gold had a massive fall, as I mentioned, and silver the same. So even a little bit lower on silver is still possible. Oil was down. Now the Small Ordinaries Index sold off to exactly 61.8% retracement at 2700. It did that on Wednesday. It managed to hold that level on a closing basis on Thursday, and then also held it on Friday following those massive falls in the US. So there's some very confusing action. I would have expected substantially more selling in the small caps on Friday, and we didn't get it. So there really are some conflicting signals, as I've written in the alerts. So let's have a look at some of the charts. So first of all, we'll start with the US dollar index, and you can see there we've had a very substantial turnaround. Basically, it didn't come off a particular support level. It's just kind of in midair at the moment. So you'd have to say the overall trend for the US dollar is still down, but certainly Thursday and Friday were very strong, and it's quite amazing that the US market did manage to rebound 1% with the dollar selling off, with the dollar rallying that hard as well. So the next couple of days will be pretty interesting, and that's why I think such a strong move in the US dollar doesn't fill me with confidence about the S&P index in the very short term. I still think it's going higher in the medium excuse me, in the medium to longer term. Beg pardon. Okay, this is the Dow Jones. I'm still looking for a possibility of a little bit lower down to this just under the 12,500 mark. So I think that's possible given the action of the last few days. Let's have a look at the S&P. So this is the S&P on a monthly, just to put it in perspective. So you can see, although we did get quite a decent sell-off on Thursday night, really in the overall context of how far it's come, it wasn't really that dramatic. So here's the S&P on a daily. So you can see the first retracement level was 1342. We did close, and then the next level was 1332. We got to 1329 on Thursday night, closing at 13.35, and then we did spike up above 13.50 on Friday night, so quite a massive rebound there, but ended up closing back down where it opened at 13.40. So I still believe that 13.24 is possible. So that's down here at the 61.8% level is still possible. A break at 13.24 and we've got a whole new ball game on our hands, and I think we'd want to get heavily short the market if that was to occur. So I think if you are long the S&P, I would take the opportunity over the next day or two, depending on how it plays out, to probably get out of those long positions and let's just sit neutral on the S&P for the minute, because I really don't have a feel for whether we've seen the bottom or whether we're going down to 13.24 in the very short term. Let's have a look at our index. So this is the ASX 200, and you can see here that we've retraced to the 47.27 area and bounced off that area twice and closed above it. We have got a pretty decent ABC pattern has formed now, but again, not convinced that we won't head a little bit lower and perhaps head down to this 46.70 area. So I think that's a distinct possible target on the ASX 200, 46.70. I think at that point, as long as the S&P is holding up okay, we can start to get back into the buying cycle again. So let's look at the materials index. It's broken through the 61.8, so the materials index probably heading lower, which is another reason why I think we've probably got some more downside in the ASX 200. This is the finance index. So we've retraced to the 38.2. A bit of a bounce on Friday, but not particularly convincing, and most of that is in NAB on the strength of their better than expected results. So I'm still thinking that 44.07 or even 43.61 is a possibility on the finance index. Another reason why I believe that we're probably going to head back down. Let's just look at the XJO again. That's why I think that this 46.69 area, or possibly even lower, is a possibility. Anyway, let's just see how that plays out. Let's have a look at gold, and you can see we had a this is gold on a weekly basis. We had a massive fall on Thursday night, and for the week 14.74. So we'll just tighten in on here. You can see that we were overbought on gold, so this pullback is pretty much expected. The question is, will it pull all the way back to the 30-week moving average? And given the size of this move, you'd have to say that was possible. So we're looking at the possibility of lower prices yet. I'm not sure whether we'll get it, but certainly this 14.74 area is critical. It closed at 14.95. So I would not be long gold at the moment in the short term. I think the risks are just too great, and I would not be at all surprised to see 14.43 or even 14.12, which would also correspond with the 30-week moving average, as being distinct possibilities. If we get a weak rally in gold up above 1500 and then it's showing signs of rolling over, in fact I'd probably be looking at short selling gold in the very short term for a quick move down. Let's look at silver on a weekly chart. You can see just what a massive drop this was. We've got this previous top down here at $31, and we've got the moving average now sitting at $32. So I think a little bit more downside on silver is a possibility. Let's have a look at the retracement levels from basically the start of this run here. So we've also got, this corresponds down here with with some reasonable retracement levels as well. So I think we've got a bit more downside in silver yet, so I would definitely not be long silver either. With respect to silver stocks, you've got to remember that the stocks will tend to lead the underlying, and that's why the stocks have been so weak for a couple of weeks. They've not gone with silver and gold, and it's quite possible that we'll see that the stocks turn up. In fact, it's highly likely we'll see the stocks turn up before the underlying commodities bottom out. So let's go back to the slides. So, and also that's what the XSO. So let's just have a look at the small ordinaries index. So the small ordinaries index, 2700 was the key. We dipped below it a couple of times and certainly dipped below it on Wednesday and Thursday, which was prior to the those horrific commodity falls, but did close back above it, so that was positive. But then on Friday, I would have expected the small ordinaries index to get absolutely whacked, but didn't, and closed back up at 2703. So I'm really in two minds with the small ordinaries. If we get a close below 2700 again, I think we're heading down here to the 2560 to 2600 area. So that's why some caution really warranted on the small caps. So let's just quickly look at some of the other charts. This is the copper inventory chart, still heading higher, and we did see a breakdown on copper on Thursday night. You can see down here under the $4 a pound. We're now down below this previous peak from October, November last year. So yeah, that's not really flush for copper in the short term to be closing below $4. So that that really does give me a little bit of cause for concern. Nickel inventory, amazingly, still falling, and I need to make a point too here that I think you've got to draw a big difference between what's happening in the paper futures market. So there's a lot of toing and froing and a lot of leverage and a lot of forced selling, as we saw in silver, with the COMEX exchange raising the margin requirements 4 times in 8 days. That caused a lot of forced selling, so this was not a natural market. And you've got to draw the distinction between this paper market with all its gyrations and the actual underlying reality of the supply and demand situation, which for copper, silver, gold, nickel is still extremely strong. So there's the nickel inventory still falling, but nevertheless the nickel price did fall. It's back on the old tops back here in September, October. So it will need to hold those tops, otherwise we're going to see lower nickel prices as well. Now amazingly, tin got hammered as well, and this is where the paper market is just completely divorced from the underlying reality of tin, and the tin price should continue to move higher over time. So just to summarise the strategic side of things, I think we can assume a bit more downside. I think it's too risky not to assume a bit more downside. It's likely we'll get a small rebound in the next few days. You should be maintaining lower overall exposure at the moment. You certainly want to have some short selling positions in there, and we've got some in our in the members' portfolio. And that's really it for this week. So a pretty amazing week last week, and we'll see what the following week brings. So talk to you next weekend. Cheers.